What's going on, everyone? Welcome back to the Future Trading Accelerator. So in today's video, I'm just going to be going over some of the benefits of trading futures over stocks, options, and Forex. So let's get right into it. So first of all, if you don't know just the hierarchy of what is correlated with what, here it is. So you have stocks that are individual companies traded on the stock exchange, Apple, Microsoft, Tesla. Then you have futures, which is it's just a contract of the index. And an index, this should basically be index, but bundles of high quality companies packed into one index. So that would be the S&P 500 or the NASDAQ 100 or the Russell or the Dow, right? All of these indices all have different companies packaged into them, and we're trading the futures contract of those indices. And then you have options, which is a contract to buy or sell shares at a set date and price. So you have indices or futures at the top, which is made up of stocks, and options is just derived off of the stock price. And so options is at the bottom. So this is pretty much how the stock market hierarchy works. So that is, hold on. So that is for, this slide. Now let's get into some pros and cons of trading stocks. So first of all, if you want to trade stocks, there is a thing called the PDT rule or the pattern day trade rule, which basically restricts you if you don't have at least $25,000 in your account. It'll restrict you from being able to have unlimited trades unless you have a cash account. So really just restricts how much money you can make, and I really dislike that. Needing to save up $25,000 just so you can have unlimited trades, I'm not a fan. And as a beginner, you should not need to put in $25,000 just to be able to test out your strategy as much as you want. So that is one reason why I hate trading stocks if you don't have at least $25,000. The second reason that I don't really like trading stocks is that there's a lot of different names to trade. And that it kind of sucks because in trading, you want to be able to master just a few. You don't need to trade a billion different instruments every single day. You just need to focus on, ES, NQ, and that's it. Or just ES for the day, or just one thing, one or two names, and really just focus on those names. And instead of trading, 13 different pairs or stocks and not knowing exactly how they move, you should really just be mastering one or two, names like ES or NQ, and you'll just become a master at those. And in my opinion, it's just way better to only trade a couple, because you get so much better and you know exactly how it moves, and that'll lead you to be making way more money than you would if you would be just trading different names all the time, really not knowing how they actually move. And another reason that this actually really just came into play like a couple of years ago was a lot of stocks that were super popular in like 2020, 2021 in the pandemic era, like, GME, AMC, Fubo, Skills. Like, there's so many stocks, and then those are only a few. There's so many stocks that, provided a ton of opportunities and a ton of money-making opportunities, and now they're just either A, delisted, they're not even trading anymore, or, they went bankrupt, or, the price action is just so garbage, there's no volume to even trade. There is no trade setups on these names. So, if you made a ton of money trading a firm, well, a firm barely moves nowadays. There's no money to be made. It used to move 10, 15 points in a day. Now it maybe will move one or two, right? Which is why I don't like to trade so many different names. The S&P and NASDAQ is never going to go away. Like unless some crazy things happen, you're always going to be trading indices, gold, oil. So if you master those, you're golden. You'll never have to worry about, trading something else or never being able to trade gold and oil ever again, right? And this isn't really a bad thing. I just put this on here just to compare it to, the other instruments. And that is that stocks have a maximum of 4-to-1 day trading leverage. So if you have a $25,000 account, you will be able to trade $100,000 worth of shares. So you could basically buy or day trade with 4 times your money, which is great. That is way more than you need. Yeah, I mean, so that's not really a pro or a con. It's just letting you guys know that, this is what the leverage is, 4-to-1, no less, no more, and it works perfect. So now that brings me into talking about options. Options are derived off of the value of the stock. So if Apple is going up, then Apple calls would also be going up. And of course, there is the Greeks, so it's not as simple as that. But on average, if Apple goes up, Apple calls will also be going up. And options do have a ton of leverage. You can literally turn $100 into, $10,000 in just a few days with options. Is that probable? No, you would have to catch a insane move on the stock, but it is a possibility. I've seen it happen a lot of times, but it's just not probable, but it just shows there's a insane amount of leverage with options, and options just are not for beginners. They are not for beginners. There are so many things that you need to learn in order to profitably trade options. You need to at least know how to trade stocks first, and ideally master stock trading first, and then you can get into options, which again, there's so many other things. Theta, Vanna, Rho, Gamma, Delta, intrinsic value, extrinsic value, open interest, so many darn things that it just makes it so much more difficult for a newbie to get in and try to master trading along with all the other stuff that comes with options. And I just don't really like options. Granted, yes, you can trade options in a cash account with not 25,000 and have a decent amount to be able to have kind of unlimited day trades, but still you won't have the full freedom that you would need with $25,000 to trade as much as you want in a margin account. And yeah, it's tricky to balance all of the different strikes and expirations, and clicking buy and sell on a futures contract is way simpler. So let's say I want to trade Apple. Let's say Apple is at 180 right now, right? That is the price of Apple. So if I wanted to trade Apple calls right now, I would probably trade the 182 or 182.5 call. And for, if I wanted to short Apple, or I was just betting they would go down, then I'd probably trade the 178 put. Okay, cool. But now what happens if Apple goes to 183? 182.5 call is probably not going to have as much volume anymore. So now you're going to need to switch to the 185 calls. And let's say, vice versa, same thing happens if Apple trades below 178. The volume is probably just going to dry up. And now you'll need to switch to the 175 puts. So right here, that is 4 different contracts that you'll need to be keeping track of. 4 different prices on each of these contracts. So you'll need to figure out how many contracts you need to go in with to keep the consistent size. And all of them are going to be moving differently. So you can see how much more complex options are, especially as a beginner, right? Where with futures, you literally have buy button and sell button. If I want to get filled, buy, sell. That simple for futures, right? So that is why I just don't really prefer trading options. and I just prefer futures the most. Now for Forex, you can get a ton of leverage. I mean, on these offshore brokers that I do not recommend, you can get as high as like 1 to 500 leverage, or 500 to 1, which basically means for every $1 in your account, you can trade $500, of Forex. But if your account goes down, $1, you'll be completely wiped out. So that's how they kind of get you. There's a lot of incentive to trade super over leveraged on these brokers, to wipe out your account, because the Forex brokers, they're not putting your order into the market. They're just taking the opposite side. So they need you to lose, so they do not, open and run their business at a loss. So they need you to lose. So it's a really, really high incentive for them to make you over leverage, because even if you're a great trader, if you over leverage, you're just going to get, totally just taken for your money, because the market just wiggles, and, you're just going to get stopped out before the actual move happens and blow your entire account. So it has a ton of leverage, but you don't need even remotely close to that amount of leverage. It is absolutely nuts. But yeah, so that's a pro and a con. Again, just making it obvious to you guys what leverage amounts you can get with these different financial instruments. Now, it's also really, really tough to find a legit broker. A lot of these offshore brokers, guys, most of them, I literally would not put a dime in there. It is way too risky. The only legit Forex brokers that I've found are TD Ameritrade or Thinkorswim and Interactive Brokers. Interactive Brokers does have the most financial instruments to trade. So that is the best regulated one, in my opinion. I know there's like Oanda and some other ones. I literally have no idea if those are U.S. regulated. I literally have no clue. I don't even support trading Forex. I pretty much hate it. But I just wanted to put this on here just to let you guys know, if any of you guys are watching this that currently are trading Forex and want to switch over to futures. Also, what I have found in Forex is the price action is just really, really weird. Like, it doesn't move as much as indices. It moves slower. There's random pops, random drops. I just do not prefer it. I think indices move way cleaner. And again, there's so many different Forex pairs. There's only really 2 to 3 good indices to trade. So it just makes it much, much better just to focus down on the 3 instead of the 30 plus Forex pairs that exist. And Forex, there is no there's nothing like options, right? With the Greeks, the theta, the delta, the gamma, the vega. It's just, it's, at least with Forex, it's super simple. It's buy and sell. It's really easy to get filled. You're always going to be making the same amount if you trade with one contract. If you trade with one contract in options, you could make way more or way less than another time that you only trade with one contract in options. So Forex does trade the same as futures. And, with all of these pretty much cons, you might as well just trade futures, right? It just makes sense. And now let's just get into the pros. And I don't really have any cons for futures. I mean, I don't see any reason why futures are bad. I mean, sure, let's get into the leverage part. There's a lot of leverage in futures too. I mean, you can, on a discount broker on TradeOvate, trade one ES E-mini contract that controls $200,000 plus of capital with $500. Again, you'd be super over leveraged and you'd blow your account in like 2 seconds. But there is a lot of leverage. It's a double-edged sword, right? It's good, but you also have to manage your risk. And, futures are super simple to trade. Again, just have buy and sell, and the price goes up after you bought, you made money, you sell, boom, get out. Super simple, super easy. There's a ton of liquidity in futures. ES is the most traded market besides Forex in the world. It is insane how much liquidity there is. I mean, you can take 500 contracts in ES, which would be equivalent to $25,000 a point. And if you take an average trade of 10 points, that's $250,000. And there's basically 100 contracts at every tick. So you would barely throw off the market even if you bought 500 in a market order. So there's just a ridiculous amount of liquidity. So you'll never have to worry about, how much size you can take, because there's just so much liquidity. It is irrelevant, and you would need to get up to such a high amount that you would probably be just stupid rich to even have to worry about, affecting the market at all. There's also a super easy learning curve in futures. Just like stocks, honestly, it's really, really simple. It's just pure price action and order flow. It's just very simple. There is no, Greeks or anything with options. So futures is very, very easy to learn, especially just with supply and demand. My strategy, it's very, very simple. It's not hard. And I just love how simple futures are. And there will always be a trading opportunity in futures, right? Whether it's ES, NQ, gold, oil, anything like that. Gold will be moving one day, or oil will be moving another day, or the indices will be doing something. There's eyes that are always going to be on futures. It's never going to go away. There's always going to be moves. So, you can just niche down on the four, ESNQ, GC, CL, and you won't ever have to worry about trading anything else. And there is some really, really good tax advantages for futures. It is, I believe, 60% of your profits will be taxed at long-term rate, and 40% of your profits will be taxed at the short-term rate, whatever that will be. And so you're just going to be paying a lot less in taxes, which is always a great thing. And also, my last point here is futures. The futures market does trade pretty much 24 hours a day. The only time it is shut is Saturday. It's open Sunday at 6, Monday, Tuesday, Wednesday, Thursday, and Friday. Closes Friday at 5, opens Sunday at 6, closes every day at 5, opens at 6. So there's always a trading opportunity at pretty much all hours of the day. Now, I only trade from 9:30 to 4, but if you have to trade outside of those hours, there is trading opportunities all the time, either in the early AM or in the late night. And yeah, guys, that is the reasons why I like to trade futures over stocks, options, and Forex. If you guys like this video, make sure you guys let me know in the comments. Make sure to subscribe, share the video with someone that you think can learn from this. And I'll see you guys in the next one. Hope you guys stay tuned. See you guys. Peace.